welcome back. You're watching Indian Open. Truck and bus maker Ashok Leyland has launched 3 new truck variants in intermediate and medium commercial vehicle segment. Considering the slowdown in the auto space, what does the demand scenario look like, and will the company see a bounce back going forward? To talk about all of this and more, we're joined by Mr. Gopal Mahadevan. He's the CFO of Ashok Leyland. Mr. Mahadevan, thanks very much for taking out the time and speaking with us. I mean,
thank you.
Let's start off first with the overall volume picture for Ashok Leyland. I mean, we've seen that Q3 saw a lower 7% volume growth, obviously owing to a higher base effect. But, in your earnings call, you have alluded to BS6 leading to a dampened demand. Is that going to be a bigger concern?
Well, actually, let me, answer your first question. Q3 numbers were low not only for us but for the entire industry. The reason being, in Q3 of FY18, which is, the quarter ending December 2017, the volume growth had been 42%. So you had a base effect. If you look at the volumes of the total industry for the 9-month period, December 2018, the industry has grown by 25%. And this has been in a year when you've had NBFC challenges, and then there were axle loan norms getting in. So actually the performance of the company and the industry has been pretty good. And what I also wanted to share with you is that in the month of January, Ashok Leyland had record market shares for the month, beating all historical highs, despite the fact that we were the only player who raised prices by nearly 2%. So we are very clear we would pursue market share growth as we move forward. At the same time, we would also be pursuing profitability.
Right, which means that there is a possibility of periodically increasing prices as and when.
Well, it is not about increasing prices. I would say that we would need to maintain profitability, but at the same time, over the next, years, as we are putting our strategies together, we are very clear that Ashok Leyland will pursue, market share growth in the domestic market. And we will have to take out costs. So we are, going through another round of operational efficiency plans. We also have a modular business program, which we will launch when we launch the BS6. And that would, again, favorably work out for at least about 2% of the material cost. So we've pretty much got our plans intact in terms of new product launches, in terms of taking material cost out. Our BS6 launch plans are very much on track. We have announced that as well, that at the test bed level, all the engines are absolutely on track. And we also have our plans for growing in the domestic market. So it's not just about increasing prices. More importantly, it's about increasing our market share, growth, as well as profitability.
Do you see a significant impact in terms of the industry growth, and there could be a possible slowdown due to BS6? Or do you think that, that's going to be taken care of because of the pre-purchasing that happens?
Well, all I can tell you is that it's a little difficult to take a guess at the moment, sitting where we are. But empirically, if one were to look at statistics, when the industry moved to BS2 and BS3 and BS4, at each of the years when the new regulation was implemented, the total industry actually grew. And what is more interesting is that in each of these years, actually Ashok Leyland market share actually also grew. So, let us see. And when we went into BS3, for instance, we were the only players to launch an inline pump for a BS3 engine. When we went into BS4, again, Ashok Leyland came out with a huge differentiator in terms of the exhaust gas recirculation, EGR technology, which today I think some of competition is also following, and this is done at higher horsepowers. So you'll have to wait and watch what Ashok Leyland plans for in its BS6 launch, but we'll have to wait and watch. I'm not too sure that the industry has to degrow, simply because if there is demand, there is no reason why truck purchases will come off just because you're switching from a BS4 to BS6. Trucks will have to be purchased if there is demand.
Right.
Maybe one quarter you could see a little bit of, typically the April, May, June quarter. I'm talking about 2020-21, which means April, May, June of 2020. You could possibly see a slackness of demand, which happened in BS4 introduction also. But after that, there was no looking back. One has to really wait and watch. So I'm not going to at the moment say that FY2021 is going to be a degrowth year or, that it's going to be a flattish year. We'll have to really wait and watch. At the moment, statistics tell otherwise.
Right. Let's talk about the LCV business that's gaining momentum and market share. Now, when it's merged into Ashok Leyland, you have, an entire range to offer by 2020. What are the business prospects of that, and what kind of growth do you anticipate?
Well, we are very, very positive about the growth of our LCV business. As you are aware, we had also announced that the LCV business now has been merged with the main company. That's the right strategy to adopt because we did the same thing with Hinduja Foundries, which has turned around smartly in less than 1.5 years after we merged it. LCV business now today, as I talk to you, is accretive to the EBITDA margins of Ashok Leyland. It's highly profitable and it has been growing. So in the month of January, our market share was 19%. In the quarter of Q3, it was 18%. And we have more products to launch. So at the moment, we have Dost, which is at about 2.25 tons GVW. Then we have got Partner, which moved from 5 to about 7.45 tons. In between the Dost and the Partner would be the launch project that we have codenamed as Phoenix, where we would move from 3 to possibly 5.5 tons. And many of your viewers must have seen that we have been launching Guru 10 ton. Yeah. We had Guru 12 ton, which was in the ICV space. We have just brought a new version of it, which is Guru 10 ton. And that is actually bringing the ICV portfolio down so that we are able to fill the slots. So the LCV business also affords another huge opportunity. That is in exports. So we have been building capabilities for both LHT and RHT. And we would be catering to both the LHT and the RHT market. So today, if you look at it, Ashok Leyland has capabilities from, both from BS3 to BS6 and in LHT and RHT. So we are completely revising our international plans as well, given the fact that we have a lot more products to offer. We are redrawing some of the markets, and over the next 3 years or so, you will actually see a distinct difference in the way Ashok Leyland is going about its international business.
Right. So, can you say whether this business, the LCV business, will actually be a better prospect than the MHCV segment?
Can you please repeat your question? Actually, the audio is a little weak.
Yeah, I was asking you to make a comparison between the prospects of the LCV and the MHCV segment.
Well, I think, what happens typically is that you would see that MHCV is a lead indicator and LCV is a lag indicator. So in the past, if you look at it, the first movement in the TIV would actually happen in the MHCV segment. Like if it grows the first, and then after that, the LCV takes on. But things are changing now because post-GST, the whole, the distribution and supply chain logistics have changed to a hub-and-spoke model, and there is a trifurcation of this entire freight industry. So you have long haul, you got intercity, and then you got intracity. There's a lot of action that's happening in the intracity and in the short intercity routes. So I believe that there's a huge potential for the LCV business, and more so for Ashok Leyland because, in the past, we have just had one vehicle called Dost, and then we just launched Partner and Mitra as a bus. Yeah. As we move forward, we have already launched, we have had 2 more versions of Dost coming in. We have the Dost Strong and the Dost Plus. And then now we have Project Phoenix, and then we would also have some variants coming in the Partner. Right. So when all of this happens, you are actually going to see that we have filled the slots as efficiently as possible, and that is going to give us a larger share of the addressable market.
Got that.
Which means in absolute volume terms, Ashok Leyland will be taking a shot at a larger TIV than it is doing today. So to that extent, it's very, very positive for us.
Right. Mr. Mahadevan, I'm completely running out of time, but I need to ask you one last question, and actually 2 questions packed into one. The volume growth outlook for the coming year, and unrelated, but from a market standpoint important, is if there is any update to the appointment of the new CEO come March.
Well, as far as volume outlook for FY19-20 is concerned, this is the pre-buy year. There was some confusion as to which is the pre-buy year. The pre-buy year is FY19-20. I believe that if things go well, we should see at least a 20% growth in total industry volume next year. Because people would want to pre-buy. Pre-buy is a phenomenon that has happened in all the emission norm switchovers in the past in India as well as in outside India as well in other markets. As far as the new CEO appointment is concerned, I think we'll have to wait for the board to make the announcement. But all I can tell you is that there are absolutely no transition issues. Mr. Dheeraj Hinduja, who is now the executive chairman, is very much available for any guidance that the management team requires. He's very, very well versed with the industry, with our company, with the various aspects of the company. Right. He knows the customer, distributors. He understands the manufacturing processes and technology. But at the same and then what I would also like to add is, the management bandwidth is pretty large. We've got a very well-experienced management team who are now, who take independent decisions. Yes. Even in the past, it's not that, it's a single person who on whom the company hinges. So we have I think that the transition has been very well planned out, and we see absolutely no impact at all or any cause for concern. It is business as usual at Ashok Leyland.
Got that, sir. Thanks very much, Mr. Mahadevan. Really appreciate you taking out the time this morning and speaking with us. That is the management at Ashok Leyland. We're going to take a very short break, but coming up, we chat with Baba Kalyani on the group's strategy, which now includes making jet engines and drones, and a sneak peek at Airbus's latest defense transport aircraft.